A lot of people are scared right now, and a lot of people are extremely confused with the current state of the market. What's happening to altcoins? Could there be further downside? Is the bottom in? And more importantly, what's going to happen over the next few months? We've had a really confusing last few weeks in terms of price action. You've had Bitcoin having a major retrace down from the 107,000 level down to 94K. Many altcoins have gone down 20, 30, 40, 50% during this period. We've seen a little bit of a bounce today, and there are just lots of questions due to this price action, which in today's video, I am going to attempt to answer. Think of this video as the North Star for the next couple of months in crypto. I'll be firstly beginning with a market update, going through the current dynamics at play, which are affecting the market. Then I'm going to answer the question whether I think the bull run is over, what's happening over the next few months in terms of the crypto bull run. Is it still following the same path that it has historically been following? Are we deviating slightly? We're going to dig into all the data there. Then I'm going to go into what I am personally doing and the exact altcoins that I am currently looking at. I have made a few portfolio moves over the last few days. Some of the members in the Discord would be well aware of them by now, that I think are really important things to address heading into the month of January. So if you are scared right now, if you are confused right now, I think this will be a really valuable video for you to help guide you, especially over the next few weeks and over the next few months. Before I get into the charts here, I firstly just want to say, I hope you're having an amazing holiday period. Merry Christmas to everyone that is watching this on Christmas. I am uploading this on Christmas Eve. Probably not going to be uploading for the next couple of days, so I want to jam-pack this video with information that can last you until Boxing Day. So hope you're all enjoying some time off with your families. Don't let the markets get you too caught up. It's always a choppy and it's always a weird period for markets, right? A lot of the hedge funds have switched off. A lot of the major trading desks are gone for holidays. A lot of retail aren't paying attention right now. So it has led to very illiquid order books, which has led to a lot of excessive choppiness. You also have this interesting dynamic right now where a lot of funds are actually locking in their profits from the year. They want to make a good impression for their stakeholders. And for that reason, a lot of these funds that were significantly up have been locking in some profits, which has, I think, contributed to the dip. So overall, it just is a weird holiday period. We have discussed this over the past few weeks as to expect some chop around this period. We're also going to discuss today what could potentially happen post-Christmas, because there could be an interesting move coming for altcoins. So let's dig into the charts and get straight into it here. So firstly, just looking at the Bitcoin price action, actually quite interesting that we have deviated back into the daily money noodle, which is basically a combination of moving averages, which have held us in good stead in terms of affirming whether we're in a bullish trend or a bearish trend for the market. Bitcoin had exploded, impulsed significantly to the upside and ended up creating a big discrepancy between the noodle and price action. Now it's coming back down into this zone and you're getting the first major retest, honestly, apart from the liquidation week in December, that we've gotten since November. So this is a very critical level for Bitcoin to actually hold. Not only is it the bottom of the noodle, but it is also a horizontal support level. I don't really want to see Bitcoin trading too much below 93K. For me, if it can hold around these levels, that would be a nice base potentially for a continued period of consolidation. We're going to get into that in a minute in terms of my Bitcoin outlook and look at the comparison versus previous cycles. But firstly, I want to give you a quick update on the last 24 hours because we have seen some significant moves, specifically in altcoins, bouncing quite heavily off the lows. I did actually say on my Twitter, as you can see 22 hours ago, that I expected a bounce on Monday, and that's exactly what we have gotten today. So that theory was basically that a lot of people were de-risking into the end of the weekend, pre the stock market opening on Monday, which did create some additional downward selling pressure, which I thought was actually going to correct itself on the Monday when stocks opened, and that's exactly what happened. A lot of cryptocurrencies, which are viewed as like basically a risk vector for the rest of the market, that was sold off because people were hedging against Monday, actually ended up bouncing because the market opened in decent fashion, which meant that crypto had a little bit of a relief bounce. So that was nice to see, and that's something that I did mention on my Twitter a day ago, and that's exactly what ended up playing out on altcoins. We're now entering an interesting period post-Christmas. If you guys have watched my videos over the last couple of weeks, you'll know I have talked about this Santa rally that typically kicks in post the Christmas period. Now, we know that the period before Christmas is actually not typically a great period, and it's usually the period after Christmas, which historically, at least for the S&P, has been the stronger period in the market. I'm very interested to see right now if that actually ends up reflecting onto crypto. I have a suspicion that it may, and if that is the case, you could say that the local bottom, at least for altcoins, could be in. So that is something that I am watching, and that's the reason why I have been accumulating some alts over the last few days during their dips. We're going to get into those later in today's video, but the point I want to make now is that definitely keep your eye on this post-Christmas period heading into the new year, because that is typically a period where you actually do see rallies versus the period pre-Christmas, which is typically the weaker period. Obviously, past performance isn't necessarily indicative of future returns. We do know that, especially because we're in a very weird place in the market right now. But it is interesting to observe, and it's something to at least be mentally prepared for. A lot of people are speaking about downside right now, and a lot of people are fearful. And I think that just comes down to the fact that there is basically a mental, psychological premium on protecting capital versus making money. So the feeling of actually losing money is much more painful than the joys of making money. And because of that, fear seems to be the driving factor behind people's decision making in crypto, which is kind of weird because it shouldn't be. Crypto is all about opportunity, so you should be more of an opportunist than acting out of fear. But that's not how the general market thinks. The general market thinks out of fear. And that's why when the market drops, you'll typically see a lot of people calling for much lower. And that's why when the market drops, it triggers this fear response where you see the market really start panicking and going into capitulation mode. So I want to make sure that my audience doesn't fall into this category, because fear actually represents great opportunities in the market. We're getting some entries across many altcoins right now, which we really couldn't have imagined a few weeks ago, considering the Trump trade buoyed a lot of altcoins. And now we're seeing many alts come back down to almost pre-Trump trade levels, which I think creates opportunity. And the only way to make massive multiples in crypto is actually to buy during fear. Because if you're constantly buying during pumps, your cost basis is going to be a lot higher, versus when you buy during dumps, your average cost basis is going to be a lot lower. So that's actually what creates opportunity, but fear tends to drive people's actual trading response in the market, which I think is a massive detriment to your trading style if you're letting that constantly drive you, because the best opportunities are during these times of fear. I like this tweet here from Cold-Blooded Schiller. It points out that we are currently exhibiting very similar price action to what we did back in the end period of 2023. This is also something I've pointed out on the show, just how similar the fractal looks. And if you have been watching my recent videos, I have been highlighting this fractal, which shows that in 2023, Bitcoin went through this similar kind of choppy price action where you actually see a squeeze to the upside, then a fake out to the downside before it ends up consolidating and breaking out to new highs. So quite interesting that right now we are seeing a similar pattern on Bitcoin. I guess the only downside is that if we followed the exact pattern that we followed in 2023, then the floor for Bitcoin is not 93, it's actually 85, because that's the bottom of this current wick that we've had in this range. Whereas in 2023, it was a much more compressed range, where we actually ended up retesting that bottom zone. At the time, it was 40K. Now it's 85K. So that could be a possibility for Bitcoin. So just keep your eyes on that. But I think the general gist I'm trying to get across here is that the price action is looking quite similar. Of course, I would love that 93K level to hold. Another interesting chart that I want to point out is actually just how similar the crypto total market cap's price action looks now versus December in the prior election year. You can see in the 2021 election year, you saw a 30% drop, just like we are seeing at the exact same time this year in December, another election year, another 30% drop. Obviously, we ended up massively expanding to the upside and creating new highs in Q1 after that. So actually, it is looking very similar to the previous election year. Once again, history, rhymes, it doesn't always repeat, but this drop although it may seem abnormal, it did happen exactly during this period last year before massive expansion. Now, I don't think expansion will be as high this time as last time. You can see we expanded from 40 bill all the way up to 400 bill. That was a 10x. I don't think we're going to go from 342 to 3.4 trillion because the market cap now has a much higher floor in crypto in general, but you very well may see it 1.5 to 2x. I think that is a logical possibility instead of a 10x. Law of diminishing returns each cycle. But what I'm trying to point out here is the similarity between the price action during the last election year. So lots of similarities right now between 2021 and 2023 Q4. So although the market may look really weird in terms of its price action, you can actually look for these patterns and start to make some sense of everything. And purely from this perspective, there's nothing to be crazily alarmed about, but we'll flesh a little bit more into that in the Is the Bull Run Over section of the video slightly later. Looking at Bitcoin on the weekly chart here, you can see that we've basically had two major compression ranges between 22 and 32, and then again 57 and 71, and now again we seem to be making another range that could genuinely form between $94 and $108,000, which may last the next few weeks. So what I think might happen, and we are starting to see the early signs of this, is altcoins may actually outperform Bitcoin for a little bit, and this could result in Bitcoin chopping sideways. So although I don't think Bitcoin chops for 8 months like it did last year, it could consolidate sideways a little bit longer, potentially whilst alts and ETH outperform. We are starting to see the signs of that over the last 24 hours. Don't read too much into one bounce, but Bitcoin is sideways, alts have had a bounce. They also sold off more, so it makes sense for them when they do bounce to bounce harder. But if Bitcoin does consolidate sideways, this could be a period where alts potentially outperform in the months of maybe January to February before Bitcoin dominance ends up reversing again. So this is an interesting chart to look at because it does put the floor for Bitcoin at 93K potentially, but also we have confluence at the 85 to 87K level versus the 2023 fractal. So I wouldn't be shocked if we did deviate slightly below here on Bitcoin. I don't actually think alts, because of the big sell-off that alts saw last week, I don't think if Bitcoin did go to 85 or 87, they would tank as much as people think, because they already have had a really big tank. So I think the percentage move for alts, if they were to go down further, I think the majority of that move has actually already taken place. So I wouldn't necessarily skew towards being bearish here, even if you thought Bitcoin was going to break down from this low and potentially settle around 85K. So now let's talk about alts. How do I think they currently look, and what do I think is going to happen over the next little period for altcoins? So the first thing I want to do is look at the weekly returns. You can see alts obviously are down a lot since this time last week. Ethereum down 17%, Doge down 22%. I'm just looking through some of the majors here. Chainlink down 22%. A lot of the smaller caps are down a little bit more. Polkadot 22%. You can see Pepe down 25%, Nia down 25%, Arbitrum down 25%, Athena down 15%, Phantom down 30%. Lots of alts sitting between minus 20 to minus 35% drawdowns. A lot of the majors and obviously a lot of the small caps are a little bit more than that. Even Hyperliquid over the last 24 hours, we're going to discuss that later in the video, it's been having some FUD, is actually down 15% today. So what exactly is happening on altcoins here? Well, the first thing I want to do is actually start a little bit further out, because when in doubt, zoom out, right, in crypto. And if you look at the monthly chart for Total 3, this is a pretty crazy wick, which obviously when you're in the middle of the wick, when you're trading day to day, these moves feel really substantial. It feels like the end of the world when you get a move to the downside, and it feels like complete euphoria when you get, this wick to the upside. But looking at the monthly, this is just one big trap candle, basically. The Darth Maul style candles that traps late longs. And maybe some of you were late longers if you were buying into that extreme period of FOMO. I do try my best on the channel to always preach buying dips and not pumps, but I do understand the market can sweep you up in euphoria. And then also this downside, I think, trapped a lot of people last week during that massive capitulation week that I even had people messaging me saying they actually sold the lows and they were asking if they should buy back. So you have these people FOMOing in at the highs and selling at the lows. This isn't anything new. This is classic psychology in the market. But when you actually zoom out onto the monthly chart, the chart looks relatively normal. You have a rejection of the previous 2021 all-time high. You have a retest of the base low at 823 billion. And then you have another retest of this mid-range level, which was actually the initial high for altcoins in January 2021. So looking at this price action, there's nothing to be insanely bearish about from a macro perspective. Even if alts came down to 800 to 850 bill, this is still not a bearish level for alts or total 3 to consolidate at. It's the previous all-time high, initial all-time high from 2021. So when I look at this monthly chart, I don't really understand the panic on alts because we've just come down and deviated back to the mid-range. Obviously, it feels painful being down 20 to 25% in a week on many altcoins, but they also had run up significantly, right? And at some point, you need to have a cool down. I actually think the cool down is a good thing potentially for our prospects of making a lot of money this cycle because it has, I think, delayed things slightly. And if the time frame is pushed back, it means that there are more opportunities to make money this cycle. So you can actually look at it as a bullish thing. Now let's discuss Bitcoin dominance because there's a really interesting trend starting to form. So obviously you've had this massive uptrend on dominance, then you've had a reversal deviation below the weekly money noodle, then you've seen a pump to the upside, but now another reversal on dominance. It's interesting because to me, and obviously this will play out over the next few days, but to me this actually looks like a potential lower high on Bitcoin dominance. So you have your high here and a potential lower high starting to form. If you go into the lower time frames, this starts to become a little bit more obvious as well. This is actually a bearish reversal pattern for dominance, despite the fake out that actually did occur when it dips below and then ended up pumping back to the upside. So I'd definitely be keeping my eye on dominance because if this is a lower high, that could also mean a lower low at some point for alts. Now, this is kind of a weird thing, right? Because if this does play out and it is a lower high on Bitcoin dominance, it probably puts a little bit of a ceiling on Bitcoin's price potential. So Smiley Capital points out here, and it's a very interesting observation. If this is the beginning of true alt season, so if this is a dominance reversal, Bitcoin is not trading above 140 to 150 this cycle. Welcome to late game. So this is quite an interesting, I guess, discussion that I'm seeing a lot on the timeline at the moment. If alts do outperform Bitcoin during Jan and during Feb, that means that Bitcoin doesn't have that juice or momentum to go up to 130 to 140 to create an even bigger alt season later. So it is an interesting argument of like, okay, if we want a bigger alt season, it actually could be better for dominance to keep going up and for Bitcoin to have a huge pump because that would delay alt season, sure, but it would create a bigger alt season later down the track versus alts pumping sooner. So it is a very interesting discussion to have at the moment. I am now starting to think, and obviously these are all just predictions. No one knows exactly what's going to happen with the market. All you have to do is do your best to position. I'll get into how I'm positioning later in the video. But I actually think we could be entering a period where alts outperform over the next month or so. Then we see a local top at some point in Q1. I don't know when it is, Jan, Feb, March. I don't know exactly when, but a local top at some point in Q1. That seems consensus. Then I think alts have a major dip. Dominance goes back up. And potentially, people start calling for the end of the bull. And then we see a bigger altcoin run later in the year, maybe Q3 to Q4. And this is actually backed up by a lot of the macro data that actually suggests that we could see that easing cycle and an easing of monetary conditions actually kick in towards the back half of next year. That maybe gets front run a little bit earlier, let's say like in Q3 or Q2. So I don't know exactly what's going to play out, but we could be entering an interesting scenario where alts, yes, they might top in Q1. Then things might go on a pause. People think it's over. We get a bigger dip, maybe Q2, and then alts run later in the year. Basically following the 2021 playbook. Remember when we had that peak in May? This time it might happen slightly earlier than May. And then we had that second peak in November, and a lot of people got shaken out during that 6-month period. Even though it would be quite difficult to deal with mentally, I think that could create a lot of opportunity because you have two opportunities. You have the opportunity now to pre-position, and then you have a secondary opportunity mid next year to position ahead of a second alt season. It's kind of an interesting cycle to navigate because you're going to need to be quite adaptive with your portfolio, and you're going to need to be pretty like ruthless in terms of taking profits on pumps. That's what I always suggest. Like people take profits on pumps, but I think it's going to be really important because you'll actually have, I think, opportunities to reposition. And that could lead to a bigger Bitcoin run, maybe in the middle or towards the latter stages of Q3, potentially where Bitcoin may actually hit, 120, 130 plus K, whilst altcoins stagnate before they end up pumping later in the year. So it's probably a little bit too zoomed out now to go really deep into that discussion, but I definitely wanted to give you my mindset on that because I think it's interesting to consider the current paradigm that we are in heading into next year. But I think one constant remains the same. This next period from January until March is really, really important for altcoins and could be the period of major opportunity for altcoins before that secondary opportunity potentially comes later in the year. Now, I have a tweet here, and I mentioned this topic before, but I'll read it again. The dip has likely extended the bull run by another month or two, which may end up being a good thing as things were moving very fast. IMO, it's better to have a reset now versus blasting straight into space and peaking in Q1. The destination hasn't changed, only the timing. So this is quite an interesting discussion, which kind of follows on from exactly what I was saying of things were moving very, very fast for alts. So having the cooldown now could actually mean that the cycle gets extended, and an extended cycle creates more opportunity for gains later in the cycle because it could lead to like a second top later in the year. All of this is obviously just complete spitballing. We don't know exactly what's going to happen, but I do think that this dip was significant enough to reset that Trump trade and reset market expectations a little bit. And it's created enough fear to probably damper the potential gains that we will see in the short term, which could lead to actually bigger gains in the long term because it leads to compression. And compression ranges lead to more violent expansion. So it's not necessarily a bad thing, especially from our perspective, because I'm like more of a narrative trader, more of a fundamentalist, and this extended timeline benefits my trading style because it creates more rotations, and more rotations means I have more opportunities to capitalize on, and it could lead to the possibility of multiple rotations in specific sectors, which gives you time to pre-position during the lulls. So if you think AI is going to be a prominent narrative this cycle like I do, every time you get a big lull, you can actually position, and then if the cycle's longer, you can bank on another rotation. Whereas if like you're saying, okay, it's going to be a Jan-Feb peak and then it's the end of the bull market, it's actually much harder to trade because you only have one rotation. So only one chance to make big gains instead of maybe 2 or 3 chances to make big gains. So I'm all for this theory of the bull run being extended because I think it could be a very good thing. And if I had to bet, I would say that this dip actually did extend things. Maybe between 1 and 2 months, but 1 and 2 months could be the difference between you making a lot of money this cycle and you like mid-curving this cycle, because we all know how quickly things can move in a month. Look at how quickly things moved in the month prior to the dip. Look at others BTC here. This is possibly one of the most optimistic charts in crypto. So if you need your dose of hopium today, this is the chart for you. You can see that the others BTC chart, I mean, honestly, if you look on a higher time frame, like the 2 week that I've got here, alts really haven't done that much yet versus Bitcoin. We haven't even had that true like alt season yet. We had a little bit of a taste of it over the last couple of months, but we haven't had that fully fledged alt season. So I think it still comes. And I think this bottom formation, which has potentially formed on others BTC, sets us up well for a breakout, which would be the break of this diagonal orange trend here. We're already now starting to test this moving average. So this is actually a level where either we reject or we smash out of, in my opinion. And we already have had that rejection, but post-rejection, the dip on others BTC actually got eaten up, which was a really good sign versus creating a lower low. So I'm just looking at this chart very closely right now because this shift of momentum could be the catalyst for alts outperforming. Keep in mind, this is the 2 week chart. So if we map it out based on just logical price action, this is probably not happening until at least late Jan to early Feb in terms of a bigger breakout. Obviously, we could just moon straight up right now, but I just don't think that is going to happen given the current market conditions. I don't think people are bullish enough to really start aping in. But I think the new year creates new opportunities and new optimism. And I think a lot of people will come back to their desks and look for opportunities in the market in January. And this is kind of an interesting phenomenon, right? Because a lot of those funds who had closed a lot of their positions and locked in performance for 2024, they'll be looking to reposition in 2025. And I know myself, we know the psychological power of the new year. Like you sit down at your desk on the first day of Jan or the second week of Jan, whenever you're back from holidays, and you want to look for new opportunities. I don't think people on the first week of January are going to be sitting at their computers looking at what to sell. I don't think that's the vibe, personally. Heading into a new year where we've seen massive gains last year, so people know what's possible, heading into the Trump inauguration, I just don't think that's the vibe. And looking from a market psychology perspective, Januaries tend to outperform historically in the S&P and in crypto because of the new optimism that comes with the new year. And the December chop can actually, in my opinion, be explained by, I think, just people locking in profits pre-holidays as well. I mean, even I did a little bit of that on the bounce. I discussed in my Discord. I actually de-risked some capital over the last few days when we got that relief bounce because, I'm on holidays as well. I want to relax. I want to spend time with my family and friends. And I mean, I'm still working. I'm not fully relaxing. I kind of get the point. People don't want to be stressy about managing like high-risk alt portfolios over the Christmas period. So when there's a slight sign of a dip, cut your position, and then, kind of chill and then look to reposition in January. I think that's a very common strategy a lot of people, maybe even yourself, are kind of following right now. And I think that could be the trigger, just that slight market shift in itself to lead to this potential breakout of others BTC, which could lead to altcoin outperformance. So I think you guys are kind of getting where I'm going to be heading here in a couple minutes when we look at the strategy section of the video, because I think there's actually big opportunities in the market right now, which we're going to go through. Quickly, let's wrap up with this segment. Is the bull run over? Looking at Bitcoin volatility, it hasn't really done anything yet versus Bitcoin price, and this is typically the trigger for tops or all-time highs in the Bitcoin price. And we haven't seen that volatility yet for the market, but I think that kicks in. And I think when that kicks in, that's when you could potentially get your top on Bitcoin and alts, which we haven't seen yet. There's pretty much no indicators, by the way, that I'm currently seeing to suggest that was the cycle top. I really don't believe it's the cycle top, especially in alts. There's a slim chance it was the top on Bitcoin, but it's very slim. I don't believe that to be the case, because even if alts did run in Q1, I think at some point later in the year, Bitcoin actually outperforms and makes new highs. So I'm not really a proponent of that at all. I still think Bitcoin's making new highs, but I don't think there's a chance that was the high for alts. A very slim chance. Obviously, market's all probabilities. Am I going to say it's 0% chance that the market's topped? No, because realistically, if you weigh up all the variables, it's probably around 5 to 10%. But crypto's all about EV. Like, you're in this game because you know there's outsized returns. Now, you also know there's outsized losses, and you can lose all your money. We know that. We play this game because we're balancing the probabilities. Could the market go crash? Yes, of course it could crash. But could it pump? And when it pumps, does that make up for the potential risk that you're taking of a loss? Yes, because the gains are so outsized. 5, 10x gains, or many odds 20 to 50x. So that's your reward. And on the other hand, you have maybe a 5 to 10% chance that the top's in. So for me, it's just worth taking the risk. And if I'm wrong, I'm wrong. But at least from my perspective, I don't think there's been many times in history where there's been really an opportunity like this. Like, I'm in my 20s, I'm 24 years old. I kind of view this period in my life as a massive period to get ahead. And what's the point in not taking risk when, the stars have really aligned for the crypto environment? Distrust of the traditional system, macroeconomic policy, which involves crazy money printing, stimulus, off the back of what happened in 2020 and 2021. You have this environment with, AI coming to fruition, with a massive shift in technology. It just seems like everything has really all come together for crypto. Like, the stars are aligning, and you don't really see these technological or financial shifts very often. Obviously I wasn't around in the 70s, 80s, or 90s, but my dad was, and some of my other mentors were, and they haven't seen shifts like this in quite a long time. We are in a period where things are shifting really, really rapidly. So for me, not to be exposed to the market right now would be riskier than being exposed to the market. And that's why I'm kind of okay with potentially losing money, because the returns are just so much greater. The potential returns are just so much greater. So it doesn't make sense to be out of the market, especially in this period right now. Imagine getting shaken out by a little bit of a scare on altcoins when all the seasonality points towards altcoin outperformance between January and May. I spoke about this in a video last week. Like, the real altcoin run historically happens between January and May. We're in December, and we're actually pre-Christmas. Maybe you're watching this on Christmas, but it doesn't change much in terms of my argument. We're pre-Christmas, which is the weaker period of December, which is typically post-Christmas. So imagine getting shaken out right now. Imagine being scared right now. Imagine not using this as an opportunity. It doesn't really make much sense to me, but I guess that's just market psychology. This video is getting long, so I'm going to skip a few of my tweets here to kind of get to the point what I'm doing, because now by now you kind of know my thoughts on the market. But what am I actually doing? Well, let's go over a few things. Firstly, the market psychology is really odd, but it's not really odd because it's just classic market psychology, whereby 2 weeks ago, everyone was begging for a dip. I remember so many people asking me, Miles, can I get an entry on this? Can I get an entry on that? Like, did I miss this? Did I miss that? Like, I really want to buy this coin. I really want to buy that coin, especially the AI coins. And everyone was just begging for a dip. Even during meme coin season a couple months ago, everyone was begging for a dip. Begging, because they felt like they missed the run. And now the dip's here and everyone's scared to buy. Like, it's crazy. 2 weeks ago, literally everyone wanted to buy. I was getting messages from a bunch of normies saying, is it too late to buy XRP? Is it too late to buy this? Too late to buy that? Now the market's dipping. No one wants to buy anymore. Everyone's bearish. It's insane to me. Now, I understand. Completely understand if you don't have capital to buy. That is a different problem, because that might be a fair rebuttal. Miles, well, I would love to buy, but I don't have capital because I'm already fully deployed. That's fine. If that's you, you shouldn't be scared. You've just got to sit on your hands and be patient. If that's you, if you don't have cash. If you do have capital, I think there is an argument to be made to be laddering into the market here over this period. Now, I don't think there's a crazy rush in terms of buying today, but I personally, what I did is 3 days ago, I set TWAPs. So what this is it's time-weighted average price orders. So buy orders across a variety of altcoins. We're going to get into some of those altcoins now. And that automatically executes for me over the next few days. So I don't need to trade. The only work I'm doing is this video, right? Keeping in touch with my Discord, doing a bit of portfolio management. That's it. I'm not trading. I usually trade a lot. I spend hours when I am at my desk during like the normal work week trading. I'm not doing that right now. I've set buy orders. They're all automatically executing over the next couple of weeks, and I'm chilling. And I'm doing a bit of repositioning, manual repositioning. So maybe, selling some stuff, getting some stables together on bounces, then rotating back into altcoins via TWAP. But that's pretty much all I'm doing. Just spot positioning shifts. No crazy trading right now. And then in the new year, I'm going to get very active with the rotational stuff again, because that's when liquidity comes back. That's when the books become less thin, and that leads to more opportunity. As I said here in the tweet, most of you would be better off just checking out for the next 2 weeks and coming back in the new year. As I said, most funds and on-chain traders have left for the year. They're going to be coming back in Jan. The major exception, I think, in terms of strategy right now is spot DCAing. That, I don't think it's ever too late to reposition your portfolio. So if there's stuff you're holding that's rubbish, consolidate into quality. It is a bull run of quality, in my opinion. I think the coins from the strongest narratives, which we're going to get into now, they're going to outperform over this next period. And it's never too late to consolidate. But don't stress about catching trades over the next week or so, because I don't think there's that many trades to catch. I think you're mostly just aiming to spot position. And I think there are some pretty easy spot returns on the table if you can be patient. And if you can have the mental fortitude to withstand this choppy period in the market. So let's get on to what I'm buying. What are some of the coins that I'm TWAPing into over this period? Let's get into it. All right, first one is from the RWA sector. I think RWA is going to be one of the sectors that rebounds the strongest. Why? Because Trump's coming into office. There is a huge tokenization narrative with Larry Fink. Utility on the bounces is still outperforming. Memes still aren't performing, right? I think memes at some point come back. But I think first utility runs the hardest in Jan. If we do see altcoin outperformance, you're going to see RWA coins, you're going to see AI coins, you're going to see infrastructure coins performing the best. And there are a few here which clearly stand out as frontrunners in RWA. Now, I don't mind ONDO and Mantra, but ONDO specifically has a big unlock, which has scared me off a little bit. I think the most obvious coin right now in RWA is CHEX. It's back down on the daily to 52 cents. They have a ridiculous pipeline of asset tokenization that are going to continue to be announced in Q1. It had a massive run up, right? It went crazy. It went to 80 cents. I didn't sell anything on this run up, by the way. I bought in at 15 cents, posted it in the Discord and did a video between 20 and 25 cents, ran it up to 80, didn't sell a cent. Now it's coming back down. First proper buying opportunity if you missed it, because this is the first daily retest of the moving average. So if you did miss it, this is the first solid DCA opportunity on CHEX. I think this will be one of the best performing tokens in Q1. And I think it's the perfect narrative at the moment. And also it's a 500 mil market cap coin that's still not on major exchanges. Once it gets on major exchanges, that's when it can really, really run. And you're looking at Mantra and ONDO between what, 6 bill to 17 bill FDVs. This is at 500 mil. So a 10x kind of gets it into that territory, and that's assuming RWA doesn't reprice, which it will, because of the insane demand for asset tokenization. So it just makes, I think RWA makes the most sense in terms, and AI, those are the two sectors I think make the most sense in terms of narrative right now, with the current shifts that we are seeing. CPOOL is another one that also got its daily moving average retest. So if you missed this, once again, another opportunity. And I'm not saying buy everything right now. You can ladder into these, but these are the things that in Q1 are going to outperform, right? So on major dips, like we've been getting, these are the coins that I'm focused on accumulating. You can see that we did end up retesting this initial high from March. And look, it was over. These coins were a little bit overextended in hindsight. You can only tell in hindsight, right? But what I've always done with any of my coins is preach buying dips. You guys will know, even last week when I was talking about CHEX at highs, not once, and you can go back and watch the videos, did I say buy now. I always say on major dips, I'd be buying CHEX. On major dips, I'd be buying this on major dips, and we've gotten major dips. So if anything, this is when you should be looking at positioning, not last week. I always say this in all my videos, but sometimes I get comments like, oh, Miles, you were shilling CHEX last week and it's down. It's like, no. Do you even listen to the execution part? Because that's a really important piece, and I always stress buying dips and selling pumps. Never would I say, oh, buying to CHEX on an all-time high wick at 80. I might, and this is where you got to differentiate between short-term and long-term bias. I might say, I expect this to be $10, and it very well may hit $10, right? But that's very different from me saying buy right now because it's going to hit $10. Execution, even if you think the destination is going to be much bigger, is still a really important factor to get a lower cost basis, which makes you bigger multiples when it does hit $10, which is why I always stress buying dips. But anyway, the good news is you're getting them now. CPOOL is another one that you're getting a dip on. PINLINK, I like this reversal that is starting to happen here. So this is one that I'm keeping my eye on. In terms of a player in RWA, it's a little bit lower market cap. I think it's around 200 mil. CHEX and CPOOL are around 500, mainly because PINLINK it doesn't have the major exchanges yet. It's a newer token. It did pump to 450, which is insane, but that was on a massive hype wick, and now it's finally starting to come back down and consolidate. You're gonna have to be patient with this one because it's still trying to find its floor after a big run up, but I do like the signs here that it did have this impulse after the major sell-off. They actually just announced their staking, and they already have $37 million in TVL secured, which I think is pretty insane. So if you do want to stake in order to earn pin rewards, you can actually do that now. And there's a lot coming for PINLINK. They're still not on major exchanges. I mean, they're pretty much just launched, right? They've still got a bunch of major partners to announce. This is one of my bigger RWA positions alongside CHEX and CPOOL. So those are the three that I'd be focusing on. Yes, there's Mantra. Yes, there's ONDO, but I think those three are probably the three that I would hold as my high conviction portfolio for RWA. Remember, you don't need to hold 10 coins per sector. You could have 3 AI coins, 3 RWA coins, 3 gaming coins. You can cover your top narratives without having to manage a 30 coin portfolio. I often recommend people hold less coins, to be honest. I think you end up much better holding less coins. All right, now let's dig into AI. Now there's a token that I haven't spoken about on the channel yet, which I want to quickly introduce. This is Litmus, LMT. This is one of my biggest AI bets that I've taken over the past month or so. I've DCA'd quite a big position of LMT because I think it's going to do quite well. What I like about this one is that, and you can't see the price data on CoinGecko because it actually was a lot lower, right? And it's pumped, and this is the consolidation, like bull flag range, if you look at it on DEX tools. But this is one that I like the resilience. During a major market dip, it didn't really move. It didn't really move at all. I spoke about it in the Discord around 75. So $75 million market cap, as you can see here. If you want to pause the video and read my written thesis, you can read what I posted in the Discord. It pumped a little bit, and then during the dip, it came down, but it barely came down compared to a lot of other coins, which is a good sign. And for me, there's a lot here to be excited about. So I took a position because of a few factors. The first factor you can see by doing two things. One, click on following. You can see they're following a lot of Oxford PhDs who I think are behind this project. So a lot of it isn't fully transparent yet because they just came out of stealth, basically. So not the entire team isn't fully revealed, and their entire plans aren't fully revealed. What we can see here are a lot of the crumbs. Also, if you look at the followed by section, Base 16Z, Sisyphus, Cold-Blooded Chiller, Rookie, Ansem. So these are big players following Limitus, but they haven't spoken about them yet. So in my opinion, there are some really smart people behind this. That's one side of things. The other side of things is that they just released their white paper, and it's freaking cool. Basically, what it allows you to do, and this is going to become more clear when the product actually starts to ship over the coming weeks and months, is it takes over your phone to create autonomous workflows. So you can have it basically executing a trade for you on chain on your phone, whilst messaging someone, whilst reviewing your calendar, whilst optimizing your like daily tasks, like all on your phone. So you can create workflows on your phone, which is absolutely insane. And I'll show you a video when it's live, when they do announce the product. But all of this was enough for me to take a position. The market cap, who they're followed by, who they're following, the white paper, which I thought was really cool. Apart from that, there isn't that much info, but I think that creates opportunity because it's only at what, 75 or 72 mil market cap. Like, for me, that's opportunity on a coin that hasn't really announced anything yet. It's on no exchanges. These big creators which are following haven't really talked about it yet. I feel like I'm one of the first ones to actually talk about it. That's why I posted it in the Discord last week. Market dipped, but it's still now around the same level that I posted about it in Discord. By the way, if you do want access to all the early alpha, the Mars High Club's a place to be. I'll leave a link in the description below because you get all my new alpha picks early. You can see this was posted on the 19th of December. It's now the 24th. Good news is for the YouTube viewers that the market went through a major dip since then, so it hasn't run away from you. Potentially, if we're in a crazy market right now, with AI, this could have kept pumping, but the entire AI market sold off, which is a good opportunity to accumulate, which is why I'm mentioning it today. So this is one of my high conviction plays. By high conviction, I mean that I've taken a bit of a risk personally. So I actually put in a decent amount of capital compared to the rest of my AI portfolio as a bit of a higher risk bet here because I like taking these outsized bets. Not saying you should do the same necessarily, obviously position how you see fit, but personally, I thought there was enough there and enough interest there for me to take a slightly bigger position than I normally would. That's just me personally. Now let's look at some other AI coins that are interesting right now. Mode's one of them. So Mode actually had a major retrace. So this, like CHEX and like CPOOL, is now giving you an opportunity to re-enter at a lower price. They're one of the leaders in terms of AI agents. They've got a huge AI agent marketplace, and they've been working on AI tech for a long time and have some really cool integrations there, and also partnering with a bunch of agents. So if you want to pick and shovels agent play, you've got plays like Mode, you've got plays like Imperial. These are the kind of bets that I would look at to get exposure to agents without having to buy the individual agent memes, because the individual agent memes have been fleeting. Of course, there are going to be some that end up surviving and lasting a year or longer. Maybe it's the AI16Z one or Fight Queen or GOAT. But I think longer term, the ones that will really last are the pick and shovel plays that are building infra and actually helping flesh out the ecosystem, and Mode's one of them. So Mode is one of my bigger positions in this sector, and now you're getting it at a 45% discount versus what it was a few weeks ago. So that's opportunity for anyone that missed that trade, because that was obviously one of our best gainers. It 5x since I called it in the Discord, and now it's back down. I think it's now almost a 3x, but you're now getting that drawdown that you're probably waiting for. Another one that we got a drawdown on that I think a lot of you are waiting for is Edge. So Edge is a newer project that I've added to my portfolio. I did speak about it a couple of weeks ago on the YouTube, but now you are finally getting the retest of this floor here, which is the top of the money noodle and this bottom range low on the horizontal at around 80 cents. So for me, this is a good zone to stack a little bit more Edge. Basically, what you need to know about Edge is that they are a competitor to a Cash, Render, but the difference is they're already cash flowing. Quite strong numbers. So if you actually look at Edge, their FDV is 70 million, Render's 6 bill, a Cash is 1.5 bill, but in terms of revenue, Edge does 1.3 versus a Cash's 1.4 and Render's 1.6, which in my opinion is crazy to be generating 1.3 ARR versus these other networks, but being at 70 mil. On a pure comparative basis, there's massive room for upside versus Filecoin, Render, and a Cash, probably the most upside out of all of them. Now, it is a riskier bet because they're not on all the major exchanges yet, which actually does create opportunity, but in terms of, volatility, it's more volatile, it's less liquid. The marketing hasn't been as good. Hopefully that improves, right? And that's something I'm actually helping the team with to improve on that side, because I think they do need to improve there. But what they have, importantly, is very strong partnerships, an existing revenue stream, which is important. It's a business, and businesses must make money. So it's making money. And they've been building since, I think, 2013, which is insane. They've technically been working on this since 2013, and they launched their token in 2018. So it's survived multiple cycles, which I also like. And all of the supply is basically on the market, which I also like. So I think in terms of DPIN/AI, Edge is worth holding in your portfolio due to the fact that there just is that massive upside versus Render and a cash, which honestly I'm not that interested in. Due to the DPIN market, I think it's more saturated now than it was. And I don't think these valuations have huge upside on Render, a cash Filecoin versus something like an Edge, just in my opinion. So that's why I ended up taking a bet there. Now, another AI protocol that I've been using is Proto KOLs. Now, this is very, very cool if you're interested in utilizing AI in your daily research flow. I wanted to point this out because I think this can really, really help a lot of you. So Proto KOLs basically is an application that allows you to review creator performance on X. So without having analytics to their back end, which none of you would on Twitter, now you can get access to the data on the KOL checker. So I'll show you how it works. If you click on KOL checker and search someone up, I'll use my name as an example, Mars Deutscher. You can see the smart followers that I have. So you can see how relevant I am basically versus other creators. So if you're trying to assess the authenticity of a creator, the success of a creator's trades, or how much influence a creator has in terms of talking about tokens, it's actually very useful. I've been actually using this over the last few days to look into a bunch of traders. You can see, Ansom's highly searched, Dan Crypto Trader, Mercury, a bunch of creators. You can also actually look at projects as well in the project checker. That's something for another time. I just wanted to focus on creators today. So you can see my tier ranking. You can see I'm an iconic player. I've got a ranking of 7237 out of 7,500, quite high. It shows my smart followers. It actually shows my token mentions. So which tokens are up. You can see I have 92.4% successful calls over the last 24 hours because obviously I called the lows. After 7 days, 89, 61.9% hit rate over 30 days. You can see the amount of successful calls that I've made. Obviously, there's a bit of nuance with this, right? Because some coins I might sell, but if I don't update Twitter that I'm selling, it can't bake in the percentages. So it's more of like an indicator than it is a necessarily like a black and white thing, because there are some flaws in terms of that specific metric. But in general, this is very cool to be able to see how many views a post gets, how many smart followers, how many times they've mentioned each coin. So if you want to work out, okay, what coins is Ansem most bullish on? What coins is Mars most bullish on X? You can actually see what coins they speak about the most. Very, 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 very cool. So I've been actually using this for creators. It's not just me. You can do the same thing with Ansem. You can do the same thing with any creator that you follow, and you can get their metrics. You can see Ansom's in legendary tier because obviously he's the biggest creator on X. You can see the tokens that he's personally mentioned the most, his X analytics, and a bunch more stuff. So this is very cool. I think it's the first consumer app that I've seen that's actually been able to nail the analytics. I think there's been projects that have tried, but they haven't really been able to do it. They do have a token as well, which you need in order to access the platform. This is called Proto KOLs. This is called Proto KOLs. The FDV is around 22 million. You can see in my Discord, I mentioned this when it was sitting at 13 million. So it's almost a 2x since I called it in the Mars High Club. But I still think there's upside here if the platform takes off, because obviously to use the platform, you need the token. So the token's basically a bet on the growth of the platform. And I know other creators have been involved in advising the platform. I've been advising the platform, and they've got the right players, I think, in place to create a nice product here. So I just wanted to mention that today as a tool that you can actually use to find more information on creators and on projects. Because I know Kaito, for example, great application, but it has a huge barrier to entry. I think it's $10,000 a year. So this is a much lower cost entry. I think for a lot of people makes sense. So that is one that I wanted to mention on the topic of AI today. Now to wrap up, I don't want this video to be too long. I just want to focus on infra, because these are the sectors, as I said, that are probably the best DCAs over this period that could outperform in the next stretch, because I still think it's a utility bull run for now, which means RWA, AI, infrastructure, these are the plays that I think are going to perform the best, and on the bounces, they are performing the best. So in terms of infrastructure, I think one interesting coin right now to look at is Hyperliquid. Now, what basically happened, and the reason why it dipped from 36 back down to 25, now it's consolidating around 28, is there was a very famous account I'm summarizing, maybe I'm not doing the full story justice, but I'm just giving you the TLDR, that posted about the potential risk vector for an attack. This is a prominent account that's called other security exploits in the past. They said that due to the centralization of the bridge, there was a potential attack vector for potential hackers to basically hack Hyperliquid. Now, this didn't mean that there was a hack, but it's just pointing out a flaw, which resulted in the price selling off quite aggressively. Now, I personally don't think if there was a major flaw, that Hyperliquid wouldn't already be aware of this, and now they have time to prepare, right? Because, I mean, they've been told ahead of time that there could be a flaw. So I don't actually think the likelihood of a big hack is really there, because they should be already preparing for this. So obviously that's always a risk in crypto. Bridges get hacked, protocols get hacked. But I don't think the risk here necessarily justifies the drop that we saw. That's the main point I'm getting across. So if you did miss Hyperliquid, I think it's probably a decent one to DCA into. Now, it was very hot. It's cooled down. It's still technically above this 4-hour moving average. So maybe you don't need to ape all the way, but it's one that I'd look at DCAing into, due to the fact that if you missed it, a bit of FUD is never a bad opportunity to start getting a position. Phantom is one that I also wanted to highlight in terms of infrastructure. It was at $1.46. It dropped down to 86 cents. It's now back at $1, but this could be a decent one to average into as well. I just think with the Sonic network launching, I think it's only really just started for Phantom, actually. It's funny. Yes, these trades are sometimes buy the rumors, sell the news, but I think the biggest upside is going to be once the network starts gaining traction. And I think they have over 100 apps launching on Phantom. So that's one I wouldn't be fading either. And then to wrap up on infrastructure, look, you can look at things like Solana. You can look at some of the other infrastructure projects as well, because they are also down. Sol is obviously a safer bet. Not huge upside, but definitely upside, right? Even something like an XRP, if you missed it, I don't hate as a trade. So my favorite coin, I don't love it, but as a trade, I don't hate it. So there are a lot of coins, BitTensor as like the AI infra leader, Athena as like, and Rune as these more reflexive bets on a bull market. These obviously sell off when the market drops, but these can also pump the hardest when the market comes back. So these kind of tokens I would be looking at right now. So this video is kind of long, but I wanted to give you the necessary information to prep you for the next couple of days, as I probably won't be uploading. And I hope this gives you a little bit more perspective on the market. I think this is, if anything, an opportunity. I think risk reward is skewing towards longs rather than selling. I think it could maybe be a choppy period into the new year, considering liquidity is quite thin on the books. But the new year should bring a new wave of optimism into the market. So for me, that creates opportunity at lower prices. That's pretty much my synopsis. I'll see you in the next video. I'll leave a link in the description to the Mars High Club if you do want to be a part of the community, as I've been guiding people throughout this period there as well. And I'm a little bit more active there right now because creating videos is really hard and takes a lot of time, but I love doing it. And I'll see you in the next video. Peace out.